What is going on YouTube? It's Sank and we are back with another one. Now in this drop I'm coming at you guys with a couple of plays, also going to give you some insights on the current market situation. But before I get this show on the road, if you'd like to help out the channel by hitting that like button, and if you're new, join the movement by hitting that subscribe. So again, the growth markets are hemorrhaging today, and right now it just seems like it's non-stop. But you know, I'm in the mix of you, so I'm going to throw up the growth portfolio. So right now we are 16 in the red, but back in February we were over 20 in the green. Now I've got a history in these markets. The portfolio I was running when the pandemic hit looked very similar to the portfolio now, and I made back every single dollar and more. And if we backtrack even further, in 2018 when inflation rocked the markets then, it was a very similar story. Now all you guys need to do to get through this period is just to do and apply two things. The first is just have patience. The second is just to change your mindset. Now, instead of getting caught up in the panic, the sell-off, the noise that's going on in the markets right now, just know the cheaper these prices get, the more money you're going to make on the way up. So that's why I'm staying dedicated to the course and sticking to the strategy, catching these plays on the low until they find their bottom. That's what I've done historically. That's what I plan to do going forward. To help me hit success then, it'll help me hit success moving forward. Now that being said, in this drop I want to cover off a couple of our plays with you that are firing on all cylinders, but what the market's doing right now is it's temporarily suppressing their shine. So let's run the first one. So we've got ticker symbol GRWG, that's Grow Generation, coming in at $35. Now this one still remains one of our channel MVPs. As a matter of fact, in this instance, let's let the earnings do the talking. So just released, revenues clocked in at 170% year on year. Now when we're seeking these high return plays, as a requirement, we need that scale up in the revenues, and this play showcases that. Not only that, we've seen them come in with a profitable quarter. Now, not many growth plays out there are able to produce profitable quarters, so this one that sets this play apart just from that alone. Not only that, they've also increased their guidance for full year numbers. Now, I remember speaking to you guys back in the beginning of the year, around January time, when they released their 2020 financials, and I was saying how I was impressed and they finished off the year in style. But it's mind-blowing to know that they're going to now do 100% on that number this year. So this is a play to be taken notice of. Now I can guarantee you guys there's some big money players who are plotting on taking this one up back to the top. As you guys can see, I'm sitting on 110 on this one. I've got my position ready for that climb, and over time I'm going to be continuing to dollar cost average into this play. This is a strong play where we've got that scale up in the revenues. They're showing that operational efficiency by showcasing a profitable quarter, and they've got that roadmap over the next couple of years to continue growing. This is easily an $80 play once all the dust settles in these markets and we start seeing some more momentum. So this is one, as I say, you want to keep your eye on. If we take a look at that stock price on the day, down almost 3%, and on the week down almost 13%. So clearly not reflective at all of the quality and direction the play is going in. Now it gets like this in these markets. Take your sports team. Just because your baller isn't performing in the first quarter of the season doesn't make him a bad player, especially if he's dominating off the pitch in the training ground. Now the manager knows that. That's why he keeps him in the team, because he's likely to perform over the rest of the season. That's the same thing with a play like this. We know off the pitch they're delivering solid earnings, crushing it from top to bottom, exactly what the investors want to see. But once it's game time, once the market's open, we know this one isn't moving in the direction we expect it to move. But with these markets, there's always going to be a recalibration down the line in that stock price. So as manager of your portfolios, all you guys got to do is just be patient with this one, and over time you will get the value out of it. Let's move to the next one. The next one I've got for that Sonos, ticker symbol SONO, another one of our plays that released their earnings and annihilated street estimates with ease. Now, with these plays, guys, I want you to remember that you're not investing into a 4-letter ticker symbol. You're investing into a company that makes millions and millions of dollars. So I'd like you guys to know the value propositions behind these plays. Now, the story of why this one's been able to grow year on year so explosively is because when a customer purchases one of their products, the idea is to continue building on it with additional hardware and software applications. So if this one can continue that momentum, the investors are set from a windfall from this play over the next couple of quarters as they continue to grow. And if we look at the charts, this one's fallen off their highs of over $43. Now they will be able to reclimb back up there with ease if they continue that momentum. Now, I want you guys to know hitting success in these markets is easier than you think. What you don't need to be doing is moving your whole portfolios over to what's in at the moment. So you don't need to sell out of the growth plays just because they're on the low right now and moving over to inflation related plays because that's in, or even over to crypto plays because that's in fashion. Now, they have their place in a well diversified portfolio, but what you want to ensure you're doing is not catching the tail end of the bull runs over there, because you're going to end up burning the candle at both ends. That's why we say stay the course. Now, a lot of these growth plays, because the price has been beaten down so much, they have the potential to deliver returns better than most other verticals out there in the market. So what you guys got to do is just ensure you're continuing to build your positions while these plays are on the low. Let's move to the next one. The next one I've got for that's BioChrist, ticker symbol BCRX. Now, just before earnings, this play was $10.67. Post earnings the other day, they spiked up to $13.07. This is off the back of them doubling street estimates. You guys know Wall Street's often late to the party on these plays. We've been in this one since $7 and they're continuing to go from strength to strength. Now, the value proposition here is that they have that medicine for prevention of HAE, but they're just doing it differently to the rest of the plays in the market. That's why we're seeing that spike in their sales. Now, this is a play, as I say, we've been rocking with them since they were $7. Over the last year, you can see this one's up over 100%, but they've still got room to climb. That's why I want to bring this one to your attention. Now, news dropped just the other day that they got approval to sell in the UK, and this just adds to their growing global dominance because they've already got approval to sell in the US, Japan, and Europe. So they're set to deliver strong financials over their next couple of quarters. Now, I'm sure you guys can see why these cheaper prices in the market excite me. Because when we have plays left, right, and center performing very well on a business level, getting these plays on the cheap just means that if they can continue that momentum, investors are set for a windfall when it comes to returns. Let's move to the next one. The next one I've got for you, that's ticker symbol HITID, that's High Tide, coming in at $7.94. Now today, this one's done their stock split, 15 for 1. Now, aside from the optics, it's to help them make that uplisting to the NASDAQ, and this is a big move for the play. Now, there's certain investors that don't invest into OTC stocks. So by making the uplisting, it's going to give them that extra exposure. It's going to help their liquidity, which will help drive that stock price along. Also, it's going to help them with their capital raising efforts as well. Now, we know this is a play that's been hitting their objectives right across the year, open up those retail outlets, making those acquisitions. So when it comes to hitting the NASDAQ requirements from a financial point of view, they should have no problem doing that. So an uplisting should be smooth on the cards. You guys know there's often a delay with these things, so it's just something to be patient for and just look forward to for my investors into this one. Now, I've still got my double up price target on this one by the end of the year on this play, given where their valuation is sitting and the momentum they're taking forward with this business. Now, in terms of entry price, ideally if you can catch this one below 750 to make good low entry on this one, then you could ride them up through the rest of the year. So it's just one I wanted to highlight for you guys that is also making moves in the right direction. Alright guys, so those are the plays I want to bring to attention, because I know a lot of you guys are sitting on good amounts of dry powder. You want to deploy into the market into quality plays. So these are just some options for you to look into. Add to your existing positions or start new positions in them if you're not already holding these plays. Now, whenever I'm jumping into a play, I've always categorized them into two buckets. The first is plays that are there to make me money, and the second is plays that are there to build and preserve wealth. Now, plays that are there to make me money, looking to be into them typically from any time from one single day right up to 2 years. And if they're plays to build and preserve wealth, that's 2 years onwards. Now, I advise you guys to take on that perspective when you're jumping into these plays, because what it does is it allows you to map out your exit strategy. Also, it means that you guys are going to be able to get through testing times like now, because you have a time frame in your mind of how long you're going to be invested into the play for. But also it allows you to create that detachment from some of these plays, especially if you guys know they're just plays that to make you money and you're looking to maximize your monetary returns on these plays in the shortest amount of time. Now, all these plays I put on your radar today, they are in the bucket of there to make me money. They haven't yet graduated to those plays that are there to build and preserve wealth. Now, some of them are on their way, like a Grow Generation, for example, but those plays that are there to build and preserve wealth, those are the kind of plays that have a longer track record of delivering strong financials and also profitability, but also Those are plays that have a defensible position within their industries, because ultimately the aim of the game here is to exit these plays in profit. So if you go in with this framework, it means you're not jumping into these plays blindly. You actually have your strategy from the outset. So if you're a rocker of the channel, you know what time it is. T Nelson says, I'm doing the same, dollar cost averaging on all my plays with top and bottom exceeding expectations. So I just want to round up the video with this one because T Nelson's on my exact way of thinking, and that's what I'm doing, continually to build my positions while these plays are on the cheap. Now I know some of you are apprehensive to grab some stock while these plays are continuing to fall, but gotta know there will be a bottom at some point in time, and you just want to ensure that you have your position ready for that point, because there could be a strong rebound off the bottom. So that's why I say you don't want to be missing out on those returns on the way up. That's exactly what I've been doing over the last couple of years. It's served me well. That's what I plan to do moving forward. But I want to highlight that he said that he's grabbing these plays that have been exceeding on the top line, that's their revenues, and the bottom line, so their net income or earnings per share. So right now it's all about building positions in quality plays that are in the market, that are on the cheap, and there are plenty of them. I put a bunch of them on your radar in this drop, and there's plenty others in the portfolio that I can name out for you guys. So just ensure that these plays are hitting their earnings with flying colors, and they're producing good guidance as well, because that gives you an indication of the direction the business is moving in. Now, it's only a matter of time before markets do adjust. We see some stability, some momentum, and it'll be these plays that are winners for you guys, that are delivering strong returns all the way up. So I just want to share this one with you guys just to round up this one. So that wraps up for this one. Drop me down some questions and comments below. Hit the like button for me, and I'll catch you in the next one.